Hello, and thank you for joining me today. My name is Drew Schildwachter, and I am on the operations team here at ConnectPay, a payroll company that supports small businesses. Recently, there have been quite a few updates to legislation surrounding PPP2, loan forgiveness, and the employer retention credit. However, if you're confused or overwhelmed by these changes, know that you're not alone. Although these updates provide a lot of beneficial opportunities to small businesses, these changes also make it harder to understand what your next steps are. But that's okay, because we can talk through these updates together. Let's outline the most crucial things you need to know about PPP2, loan forgiveness, and the employee retention credits for the time being. First, we need to start with the most urgent program you need to submit for, which is PPP2. The Payroll Protection Program 2 should be a top priority for any small business that suffered a 25% decrease in gross receipts for any quarter in 2020 as compared to the same quarter in 2019. Remember, comparing your gross receipts by quarter is critical to understanding your options when applying for these government programs. It's important to look at this slide and do this type of analysis of your gross receipts so that these programs I'm about to describe have context for your situation. As of now, the deadline for PPP first or second draw application is this March 31st, 2021. While industry experts are currently at a 60-40 split on whether this deadline will be extended, nothing has been decided yet. So as of now, this is the most pressing matter. If the deadline remains on the 31st, you will actually have to submit your application before this date because your bank needs additional time to assign you an E-Trans number, which is how the SBA loan servicing portal recognizes your application. You may have heard that under the Biden administration, small businesses with under 20 employees were given an exclusive 2-week window to apply for PPP first draw and second draw loans. But this time period just ended on March 9th. So if this 2-week window wasn't applicable to you, or if you missed this window, now is the time to apply. But what application to use? Well, there were multiple new forms introduced on March 3rd. So here is the current updated lineup. Form 2483 is for first draw loans up to $2 million. And Form 2483-C is for first draw Schedule C filers. And then they've added the 2483-SD, which is second draw loans, also up to $2 million. And the 2483-SD-C, which is second draw Schedule C filers, like sole proprietors. The current administration was trying to be more helpful to sole proprietors and small businesses by expanding the dollar value of their PPP loan with the Schedule C versions. Unfortunately, it was introduced with very little time for the banks to update their systems, considering the March 31st deadline. With pressure mounting against Congress, this may be extended, but there are no guarantees. If you're eligible for PPP2, act now. This is the most important thing you need to work on in the next week, unless this deadline is extended. Now, we can't talk about PPP without talking about PPP loan forgiveness. While the deadline for PPP2 application is approaching, there is no rush to apply for loan forgiveness right now. All first-round borrowers were given a 24-week covered period. And then you have 10 months after the end of the covered period before interest payments are due, which means you have until August this year at the earliest before interest even begins. We've seen some banks emailing borrowers to apply for forgiveness now, but this is not necessarily in your interest. Understandably, banks want to get these loans off their balance sheets, but there are some potential problems with applying now. First of all, if you apply for PPP loan forgiveness and your application gets held up, it could stall PPP2 and cause you to miss the deadline if you're eligible. Second of all, if you are eligible for ERC for 2020, which we'll talk about in a minute, you need to be especially careful with how you manage PPP loan forgiveness in order to maximize your credit. Now, if your business was only lightly impacted and you're not eligible for PPP2 or ERC, or if you're selling a portion or all of your business and need to get the loan off your books, waiting may not be the best move for you. Otherwise, there is no rush, and I encourage you to wait until May, June, or July so that all the kinks are worked out between the banks and the SBA before you apply. When it does come time to apply, though, there are 3 updated forgiveness forms: 3508S, 3508EZ, and the original 3508. The most common application needed is the 3508S, which is the simplified form for loans up to $150,000. The 3508S form will apply to 86% of all applicants. If you would like to access any of these forms, they're available on our website at ConnectPayUSA.com. So moving on to the employee retention credit. The ERC is a refundable tax credit that reimburses employers for certain employment taxes due to COVID-related hardships. There are 2 versions of ERC. One that's for 2020 and one that's for 2021. Let's focus on the 2020 version first. Employers are eligible for the credit if they paid qualified wages between March 12th and December 31st, 2020, and either their business was shut down fully or partially due to government order, or their business suffered at least a 50% decline in gross receipts as compared to that same quarter in 2019. ERC is then available for each quarter in 2020 until your business has recovered 80% of its gross receipts as compared to 2019. We recommend working with your CPA to determine your eligibility. If you qualify, the credit will equal 50% of the first $10,000 worth of qualified wages you paid to each eligible employee, again, between March 12th and December 31st. This means that you could receive a credit of up to $5,000 total per employee. There are some exceptions, though. Employees not eligible to be counted towards the credit include those with 50% or more ownership in the business, or employees that are a family member. Once you know the periods you're eligible for, you will need to remove any wages that do not qualify from your payroll reports. On top of the employee exclusions, it's important to note that any wages counted towards the Families First Corona Response Act, or the FFCRA, and those were individuals that went out of work due to COVID and were able to claim those credits, or the payroll protection credits, are also not considered eligible wages. On March 1st this year, the IRS issued Notice 2021-20, which provided additional guidance on how to differentiate between PPP and ERC looking backwards. Borrowers who already applied for forgiveness will have to pay careful attention so they do not double dip. The IRS also confirmed that amended quarterlies will be required in order to receive ERC. Historically, 941s can be amended up to 3 years, which means you have plenty of time to digest the guidance and make a plan. You do not need to file your amended returns right now. We recommend waiting until after tax season to work with your CPA and ConnectPay to maximize these credits and allow for additional guidance to be published. Additionally, the IRS guidance issued so far is only applicable to the 2020 tax season. In fact, we won't likely receive new guidance from the IRS on ERC until they have digested the passage of the American Recovery Plan Act, or ARPA, which was signed last week. However, it's still important for us to discuss ERC for 2021, which is available for each quarter in 2021. The credit increases and the eligibility requirements decrease. Those eligible for the 2021 credit only need a 20% or greater decline in gross receipts when compared quarter by quarter of 21 to quarter by quarter of 2019. Additionally, the credit covers 70% of the first $10,000 worth of qualified wages paid to each employee each quarter. This means you could receive up to $7,000 per quarter for each employee, or up to $28,000 for the year. While Form 7200 is available to take advanced credits this year, most people will use the updated 941X form for Q1 of 2021 to accept these credits. Again, we recommend waiting on applying until further guidance is issued. When the time comes for both ERC 2020 and ERC 2021, ConnectPay will be filing 941s on behalf of our clients who are on our service for the affected quarters. Once your credits amounts are established and documented, we will file the 941X, an amended paper form for each quarter. When the IRS processes these forms, they will send the refund check out. So to wrap things up, where the PPP loan forgiveness, and ERC stand for the time being, I hope this information we covered is beneficial to you moving forward. However, if you have any questions now or as more information is released, I encourage you to reach out for help. And I've included on our website on the screen in case you need further assistance. At the top of our homepage, we have a PPP forgiveness link, and all of these documents are kept on that special page. So thank you and have a great day.